Last week, we had the worst performance in the S&P 500 in 2025 so far, yet when we take a look, one of the best performing industries was in fact the healthcare, other than Eli Lilly, which was down 8%. And if we take a look year to date, we again see a lot of red right across the market, but one of the strongest in fact sectors here again does sit at healthcare, where even Eli Lilly, which was down, was up around 11%. Now we do go into the markets today with Wall Street saying global stocks are headed for further declines as the pre-market isn't looking that great. In fact, the Dow is down nearly 500 points, and a lot of this is being put down to a very intense market sell-off, with the reason being upcoming recession fears. Now we also notice the Fear and Greed Index is going even further. It was just sitting at 20 at the previous close, now sitting at 17. And today we want to focus on Novo Nordisk, which is down around 9%. We're going to cover why the company is down and whether or not now is a great opportunity to buy at its 52-week low, with both Wall Street and Seeking Alpha considering this company a buy. And we can see over the last year plummeted negative 39%, yet over the last 10 it still has massively outperformed the S&P up 235%. So first let's cover why the company, which we do see as a high quality one, is in fact down. And we can see whilst it was down only 6.3% in the pre-market, it does seem to be going even further, and we can notice they have now released their latest trial results for their next gen weight loss drug. So let's take a look at the actual information to understand whether or not there is cause for concern. And we can see their next gen weight loss drug, CagriSema, helps obese or overweight adult patients with type 2 diabetes lose around 15.7% of their weight after 68 weeks, which is just over 1 year. Now, it was previously forecasted that weight loss would be around 25% for the patients who do take this drug, and we even saw in one of their trials in December it was around 22.7%, so also lower than what was previously forecasted. But unfortunately, it is just coming in lower, 15.7%, nowhere near the initial 25% that they had been expecting. And we can clearly see the drop here was that the market was hoping that this CagriSema could be the next gen weight loss drug, as they do have very successful drugs in Wegovy as well as Ozempic, which has helped them become one of the most valuable companies in this industry. Now the institutions themselves, they hold around 11.5% ownership, and they were selling around 4 billion over the last year, but in the same period they did buy around 50% more, and we see the same conclusion when we look over the most recent quarter. So very obvious, institutions are very bullish, or at least in 2024, on Novo Nordisk in general. And when we get to the valuation of this company, this is what we would call a severe undervaluation signal. The forward P sits at 20.3, well below the 5-year average of 30.4. And we also get dividend yield theory here, which tells us a company is undervalued when the yield sits above the 5-year. 2.01 above the 1.41, again another undervaluation point. And we get our third one here when comparing it to their 5-year average forward PE. We notice the blue tunnel, which indicates the expected fair price, increasing over time, which is good. This is what we want to see. But there is a massive disparity to where this company sits now and even the lower end of the expected fair price. So again, we are getting a lot of severe undervaluation signals for Novo Nordisk. Now we do get a valuation grade on a D-, and we can see this is in part due to the fact the sector does sit a lot lower at 18. So you are paying a 22% premium. One that we will come to show you is in fact one that is worth the premium. And two, their 5-year average, as we just saw, does sit a lot higher, so they are trading in fact a discount to their own historical numbers. So whilst every valuation metric in here in fact reinforcing that this company does trade at a premium to the sector, we also notice that it actually trades at a discount to their own historical figures. Now they are also one of the largest pharma companies in the world, second to just Eli Lilly in first place, with Johnson & Johnson quite some way below. And their most recent quarter for earnings, their revenue was up 30% on a year-on-year comparative. We noticed the Ozempic, the GLP-1s making up the largest bulk of their revenue, up 12%. but we can in fact see here the Wegovy in terms of the obesity bracket, a very sharp increase of 91%, their fastest growing revenue element. But if you even look at their other streams, they are growing at some very rapid rates, and their margins, which we will come on to on the gross operating and net profit, are very strong, significantly above the sector in comparison. Now if we just very quickly look at their full year for FY24, their top line is up 25%, their gross margin up 0.1 percentage points to 84.7%, their operating profit up 25%, and also their bottom line net income up 21%, with also a very similar increase to their net income margin. So it is very strong. They are growing at a double-digit rate continuously, and we can also see GLP-1, one of their largest income streams, is helping them grow at a very rapid rate, as in fact we can see here in comparison Eli Lilly with their alternative product, whilst that has been increasing, it is at a much smaller rate. We can also see here that they have almost tripled their global patient reach in the last 3 years, with their market share for GLP-1 going from 58% in 2021 to now 63%, whilst Eli Lilly in comparison has actually gone down from 38%, now sitting at 34%. One thing we also love about this company is the return on their invested capital. We want a minimum of 10%, and this is incredibly high, one of the highest we've seen on this channel. Even though it has been decreasing, 56% is still very strong, and their shares were up on their latest earnings. They performed very well, as we can see, better than expected net profit in the fourth quarter, and it came in at around 28.23 billion, which was well above the market forecasted of 26.09, and they posted a 107% increase on those Wegovy sales. Although they were slightly lower than what the market wanted, nonetheless that is at a very large triple-digit growth rate. In terms of the earnings over the next 4 quarters, they are anticipating double-digit growth to the EPS year on year, whilst also having a 75% track record, 3 out of 4 beats, and based on the $4 they anticipate in earnings per share in 2025, they are trading now at a forward PE sitting around the 21 mark. As we said, they do deserve a premium to the overall sector, A- in growth, because the revenue is up 25% year on year, expected 21%, well above the sector at the mid to high single digit, but also above their own 5-year average at 18 and 14% respectively, whilst also growing their EPS at a faster rate of 24% than the sector at 11 and their own 5-year at 14.3, which is telling us this company now trades lower than their 5-year average in terms of their revenue growth, in terms of their EPS. But ultimately, when we do look at their valuation, they're actually trading cheaper, which does sound like a very good reason to continue to deep dive on this company and understand whether it is one to consider adding. We also notice in terms of sales growth from 2021, they have been increasing at a double-digit rate, and 25% was that for the last full year of 2024. Their profitability also looks strong at an A+, gross margin 85%, sector at 59%, their own 5-year a little bit lower at 84%. Bottom line net income 35%, sector burning through cash -4%, their own 5-year a little bit lower at 33.6%, and they generate a ton of cash from operations, 17 billion, their own 5-year sitting lower at 11%, and we also notice the majority of the sector, in fact the median, does sit at -14 million, losing cash. So a very strong company, not only looking very good in terms of evaluation, but also improving on their margin. We can also highlight the operating margin, which has gone from 43% 10 years ago to now sitting at 48%, and their free cash flow, pretty much a fairly consistent free cash flow machine, coming in at 24% in the most recent year. If we were to look at the net debt to EBITDA correlating to the strength of the overall company and the balance sheet, we want below 3. We notice that every single year, and remember, these are the number of years it would take the company to pay off all of their debt net of cash on hand. 0.5 on a trailing 12 month, expected to go lower to 0.41. Very strong balance sheet, definitely something we do love about this company. And we also notice that they do increase their dividend at a very rapid double-digit rate. In fact, they've been increasing it at around 21% year on year over the last 20 years, whilst also incorporating the fact that they are a dividend aristocrat with 25 plus years of paying a dividend on an increased basis. And one thing we always like to look at with companies is their capital allocation. Not only do they pay a dividend, but we also notice, at least for 2022, 2023 and 2024, they have done share repurchase, which returns excess cash to investor pockets, and that can be highlighted here as the share count has been decreasing over the last 10 years. And in terms of what they expect for 2025, they do expect double-digit growth to continue at around 16 to 24% and another double-digit increase to their operating profit. Now, before we jump into the valuation, we want to let you know we have just this morning released our latest free weekly article. We draw on every single Monday morning to your inbox, where we cover severely undervalued stocks as well as what's gone in the market over the last few days. So click below, you can sign up and read straight away, where you'll also be able to gain access to severely undervalued stocks for the month of March and the upside that Wall Street themselves see over the next year. And on top of that, you can grab a recently released copy of 32 stocks that Wall Street themselves believe have the most upside in the S&P right now. So click below, you can sign up and read straight away. Now, jumping into our valuation, we get to $101 derived from the DCF model. We have the free cash flow year on year updated for their full year 2024, average coming in at 10%, and we have used a growth rate of 14% moving forwards. Bear in mind, as always, numbers are subjective. You can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for Novo Nordisk or any others. But 14% with a discount rate, that then does give us the present value of future free cash flows and terminal value, which we add with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and that gives us 101, indicating 26% upside. Now, I'll show you for full transparency at the 12% rate, $87, indicating 9% upside, and for those that are a lot more optimistic, at the 16%, 116, indicating 45%. Now, we're not just done, as we do always like to add a margin of safety, where we use 10%, execute on that if it meets our 3 golden criteria: wide moat, strong financial metrics, good forward-looking data. That would make this into a buy at around $91, and then we keep going till it's near the current trading price, and effectively what we're saying right now is you are getting a 20% MOS up to $81, with Wall Street very bullish. They see this at $110 over the next year, translating to 38% upside. Now, for those that want a bit more, at 25%, a buy at $76, and that 30% around $71. But in today's episode, 20%. We can also show you, for those that do believe the lower rate to be more appropriate, at the 12% point, intrinsically $87, which means when we do run it through the margin of safety, that is pretty much what you are getting now, 10% MOS, and the upside does remain untouched. As always though, do give us your thoughts. Is this one now that you see as a buy, hold, or in fact to sell? Don't forget as always to sign up to the free weekly newsletter, grab those spreadsheets, come and join us in the Patreon where we do cover our weekly buys and sells. And as always, have a great day. We'll see you all on the next one.